love the channel and find it useful in becoming a happy retiree. Subscribe today. If you looked at your 401k this week, or you looked at the market or the nightly news or the newspaper or Twitter or across social media, pretty much anywhere you looked, you're worried about North Korea. Not the sense that we're not the sense that we're nervous that we couldn't squash all of those issues if all this is bark turned to bite, but you're saying to yourself, whoa, what if? So we're not necessarily worried that we couldn't just completely take care of North Korea. That's we all know in our heart of hearts that that's North Korea in itself really not a big issue if we had to go toe to toe with North Korea. We all know that as Americans. But if all of the barking turns into biting, then you start to say to yourself, well, what if this thing escalates? So what if we end up in a real fight that goes beyond words? Well, then you start thinking really, well, what's China going to do at that point? So is this geopolitical event, is this the event? Is this geopolitical event? Is this what's going to finally squash markets? Is the North Korea standoff a game changer for markets? And is this what's going to bring down the house? That is the worry as I talk to folks this week. So it's time to break out the economic history books. It's time to understand what happens to markets in the short run when things get really scary around the world. We're going to look at short run, day of, then we're going to look at what happens out 6 months and out a year. And we haven't had a major geopolitical event really since Brexit. Brexit was the last time we had a real surprising political, call it geopolitical event that markets really were not expecting, took markets off guard. So we have to go back and understand when tensions get high and we start worrying about things like missiles and wars, what happens to your money? So the start of World War II, the Pearl Harbor, First World Trade Center bombing, 9/11 terror attacks. And probably what you all been thinking about, and I know I talked to many families that remember this like it was yesterday, the Cuban Missile Crisis. So a lot of parallels here, obviously. You've got this small country dictator, quasi-backed by a real military somewhere else far away, puffing their feathers. And that's almost exactly what's happening today. It's just happening in Asia. It's not happening in Cuba. So before I go into these events, I want you to also probably acknowledge a couple of things. I know what you're probably thinking as we're having this conversation, because this is just you and me here today. I know you're probably thinking, you're saying this, I'm having this conversation, Wes. Hey, Wes, is this time different? Or maybe this time it's different, isn't it? We've never seen anything like this crazy before. We were dealing with a ridiculous human over there in North Korea. Undoubtedly crazy. He's got the full support of his little nation. He's got real weapons that could be, and by the way, the operative word here, it is still could be. And yes, the prospect of that would be different. And yes, undoubtedly can be a little scary. But now try to think back and put yourself in the time of the event or those geopolitical scary events that you and I have both lived through. Well before, and this is when you're in the middle of it, well before there was any real clear solution. You got to think back to the middle of any war that we've been through. Any war where there was no clear end. I mean, think about get back to World War II or Vietnam or Gulf War, the day that JFK was assassinated back in 1963. Think back to 1987, Black Monday. Think back to the day of 9/11 and the months that, and the heartache and the emotional heartache that followed that. Remember the enormous amount of uncertainty that we felt. Every single time you felt that same, hey, I don't know where we're going. I don't know when this is going to end. Remember, in every case, every single time, it was a little bit different. It was scary. It was the same fear. It was the same uncertainty, but it was caused by some unique event. And it was different because and we didn't know how we were going to get out of it. We didn't know what the resolution was because none of us can see the future. And when you're in the middle of a crisis, You're in the middle of a world crisis and you're staring down the barrel of something that we don't have any control over it. As a human, you're sitting there, you're thinking, how do I invest the right way for my family for the long run? And you have no control over some massive global event that's happening. And when that's the case, there's nothing more unsettling than that. We have no control. We've got no clear picture of what the resolution is going to be. What are we going to do? What are they going to do? How are we going to stop this? And that's supernatural. That is natural. And it's impossible not to play out in your mind the potential worst case scenario. So you're thinking, oh, what if this? What if this? What if this time the avalanche really does start and it doesn't have a quick logical end? And what if it spirals out of control? I mean, that could happen, right? And then what? Well, what do your stocks do at that point? So do you stay invested? Do you run for the hills? Remember this, short-term money for non-investors, short-term money always runs for the hills. So when you see markets react, knee-jerk reactions, like we saw this week, markets down 1.5%, depending on the index you look at here in the United States. The short-term money, think about what's short-term money. That's who's trading when you see markets go down in these sporadic periods of time. So short-term algorithmic trading, you know what they do? They have computer algorithms that read. They read literally they pick up words as data points. So they may read 12,486 notations of the word nuclear or war or terror across the globe, all around every single online news story in the world. And these trading mechanisms literally do they run an algorithmic word scan and they trade on that linguistic data. That's who's trading here. But remember, you're not set up to do that, nor do you want to be set up to do that. You're not that kind of an investor. So as smart and logical as these machines might seem that way, they don't actually produce good results in the end. They really don't. So we've got to go back to and start remembering what happens in the short run, like we're seeing these nervous iterations in markets today versus what really plays out over 6 months and a year. So yes, this week the Dow was down a little over 1%, S&P 500 down about 1.5% due to all this escalating rhetoric with North Korea. You've already heard the news that potentially they've miniaturized nuclear weapons that could end up on an ICBM, and then they have this specific outline supposedly for striking Guam. So none of that's comforting news. I get that. And almost naturally markets they're going to shake on that news. They're going to quiver a little bit. And it's the same for other nerve-wracking historical market events. I mean, in the day you hear of scary news, markets always react to the downside. December 7th, 1941, Pearl Harbor, markets down 4% one day. November 22nd, 1963, JFK assassinated, markets down 3% in one day. October 19th, 1987, now, of course, known as the crash of 87, markets down 20% in one day. 9/11, 01, markets down 5% that day. How about June 24th, just this year, 2016, like yesterday, right? The day of Brexit, markets down almost 4% in one day. But then you look and you start to get out the economic history book and you say, yeah, these were all real events that happened. And they were all bad, and they were all scary, all of them. But where were markets a short time later? So just 6 months later, after Pearl Harbor, 6 months later, markets in total were down only 6%. That's normal up and down market volatility. You've got to be able to deal with that if you're an investor. That's garden variety volatility. 1 year, up 4%. So after Pearl Harbor, a year later, markets were actually net positive 4%. November 22nd, 1963, JFK assassinated. Oh my goodness, what is happening to the entire world? Scary times. 6 months later, markets up 16%. A year later, up 24%. October 19th, after the giant crash in 1987, 6 months later, markets up 15%. A year later, up 22%. The day of 9/11, 6 months later, markets up 12%. Now, a year later, down 14%. But if you really look at all these geopolitical events, you look a year out, the ones that were actually still down, it's because they were accompanied by a recession, and recession was the cause of markets being down, not the geopolitical event. How about June 24th, 2016? Again, Brexit, 6 months later, up 11%. A year later, up 19.5%. So you've got to look at these events and remember that markets shake, but they don't break because of geopolitical events. Very simply, markets, they get nervous, they shake when uncertainty hits. You give it a short time, markets recover. 6 months later, a year later, we're generally not just a little better off, we're generally much better off. You do the math, and I've listed 18 of the 18 giant geopolitical scary events. And you start with Germany invades France, then Pearl Harbor, then JFK, then Penn Central. You keep going. 87 crash, first World Trade Center bombing. You keep going. USS Cole, Yemen bombing. You've got September 11th. You keep going. Lehman Brothers, Bear Stearns. You look at the day of, on average, markets down 3%. We're down 1.5. So we may have some shaking to go. You go out a year later, the average is up 2%, over 2% in 6 months, over 2% a year later. So we've got to remember that as scary as things are in the moment, they quickly get better. They quickly get better for stocks in the not so distant. And you're certainly saying to yourself, well, this could be different, Wes. These are nuclear weapons. You're dealing with a crazy man. That's not the 1960s anymore. So it's 2017. The world's a scarier place, it's a more volatile place. There's more fireworks in the shed. And the explosions could be bigger and worse. And I understand that, and I get that. But we also have to understand that over time, every single time we are faced with any new geopolitical crisis or event, that we can't see, and we may not even know or see our way out of it. How long will this last? How bad will this be? There is always a healing, and stocks look so far ahead and so far forward that they understand that a geopolitical event or a series of geopolitical events doesn't bring down markets. Recessions do. So it's the lack of economic activity that's what hurts stocks. Even though we think to ourselves, well, Pearl Harbor, what did that do to stocks? You know, President Nixon resigning, JFK assassination, Iraq invades Kuwait, the Asian financial crisis, the 9/11, all these things took down markets in the short run. And then over time, there was this rebound within 6 months, and with a year, markets were decidedly higher. And that's what we have to remember.
Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.